Hello, 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 and welcome to another episode of Freedom Ain't Free. In today's video, we're going to be talking about how to lower your taxes as a high earner. You're working hard, you're putting in the effort and energy into your career, and you're climbing, right? Your income is growing year after year after year, but your tax bill is growing that way as well. So we're going to talk about the top three tax-free investment strategies that you can put in place today to eliminate that tax problem completely from your life when you get financially free. And what I want you to get and wrap your head around as a high earner is the idea or the concept around the fact that I'm planning for my freedom. There are things that I'll have to endure today, but I'm planning to get financially free. So my name is Joel Hughey. I'm the principal at ARC Financial Strategies. And if you want an individual plan put together for you, specifically around the three top tax-free investment strategies, there's a link in the description below. You click on that link and get you a session booked so we can get you your freedom number. If you want to join us in our school community and get more details and more information and more wisdom, knowledge, and understanding of all of these tools and more than the 15 minutes that I can give you today, click on the link below. Join us at the Financial Freedom Institute. So, taxes are beating you up. You're earning income, but a large percentage of it is going out in the form of taxation. Now, I am not giving you advice today on your actual tax returns. We're going to be talking about actual tax-free investment strategies that can eliminate the bill altogether, right? And the goal is to get you to a $2 million portfolio where you can earn between 6 and 8% on that portfolio year after year after year, and that's going to put you in a position to have $120,000 to $160,000 a year in income, right? And at that point, you are financially free. So these particular strategies are designed for you to get there, building out your portfolio so that you can free yourself so you can go and do the things that you are passionate about. Maybe you want, to volunteer at your kid's school, or maybe you just want to show up at all of the things that are going on at your kid's school that are important to you and your family. Maybe you want to live in a different city. I don't vacation anymore. I just live in a different city. Maybe you want to live in a different city, spend 6 months here and 6 months there. Maybe you want to see the world. Maybe you want to take a long cruise, right? They got 100-day cruises and 300-day cruises, right? Maybe you want to roll your sleeves up and get into this community, and you want to be there to share all of the things that you have learned with others so that they can have a better life. Whatever it is you're passionate about, these strategies are going to help you accomplish that. So I want to encourage you to grab these three and put them and get them set up into your overall portfolio. So your top three tax-free investment strategies are the Roth accounts, which would either be a 401k or a Roth IRA. You could use municipal bonds or I bonds or cash value inside of a life insurance strategy. So we're going to go through all three of these. But if you really want complete, full details about them, I encourage you to connect with us at the Financial Freedom Institute, join the school, and I give you a detailed, in-depth conversation on each one of these particular topics. So let's jump in. Roth accounts, right? So the Roth account was established in 1997 with the Taxpayer Relief Act. You can thank William Roth Jr. He was the architect of this strategy. And so the Roth IRA or the Roth 401k are getting ready to celebrate 30 years as a tool that we've had. Now, I bring that up because we're talking about tax-free investment strategies, and this one is not even 30 years old yet. Right? So the first batch of retirees are just now getting to the point where they've accumulated enough to be able to withdraw from their Roths, right, and have a solid retirement strategy. So you want to make sure that you set these up. If your job offers you the Roth 401k option, you want to take advantage of that. If you're a sole business owner or small business owner, you can open up a solo 401k. Outside of that, you want to maximize and utilize the Roth IRA strategy. So you can have a Roth 401k and a Roth IRA. You can have both of those individual strategies working together. There are limits in that space. So if you are single and you're making more than $168,000 in 2026, or a married couple with earning more than $252,000, you can't use the Roth IRA strategy because you have income out of that. But you can use the 401k strategy because there's no income limits on the 401k strategy. There are dollar amount limits on both. So if you're under the age of 50, the maximum amount of money you can put in your Roth IRA this year is $7,500. If you're over the age of 50, the maximum you can put in 2026 is $8,600. In your 401k, if you're under the age of 50, the maximum you can put in is $24,500. And if you're over the age of 50, the maximum you can save is $32,500 with a maximum contribution between you and your employer not to exceed $72,000. So these strategies have limits. So they may not get you all the way to your freedom number, but what they will do is bridge the gap. So again, if you're over the age of 50, that's $8,600 a year you could put into the Roth IRA, $32,500 a year that you can put into the 401k strategy, right? So well over $40,000 a year that you can save. And I'm going to come back to that number here in just a few minutes. The second strategy we're going to talk to you about today are municipal bonds and I-bonds or treasury bonds, whichever word you want to use. These are loans to the government. Loan to government money, government pays you back with interest. You don't pay any taxes on the interest. You're going to find that ranges somewhere between the 3 and 4% range is basically where you're going to find most of these strategies. There are a few states that are paying a little higher, but the higher the rate, the greater the risk, right? So municipal bond strategies, are simple to understand. You can buy the bonds directly from the government or usually directly from the locality, or you could buy a mutual fund that has a collection of municipal bonds in it. Again, the interest that's being paid back to you is being paid back to you tax-free. So your idea or strategy is, I'm going to take this income that I'm earning today, I'm paying taxes on this income today, and then I'm going to shift my investment strategy over into the tax-free strategies so that way when I get financially free, I don't have to pay taxes at all. I have $160,000 a year, $120,000 a year coming in completely outside of the tax system altogether. The third option you have is cash value inside of a life insurance strategy. And in your options within this space, we're talking about permanent insurance. There are only two types of life insurance. There's term insurance and permanent insurance. But there are about 4 different types of permanent insurance strategies that you can use from an accumulation perspective. You can use a whole life strategy, which is going to offer you a guaranteed rate of return using a mutual company. They're typically going to pay you a dividend on top of the guarantee. You can use the universal life strategy, which is going to give you a fixed rate return. You can use an index universal life strategy, which is going to give you a credit based upon one of the indexes that you choose to associate your account with. Or you can purchase a variable universal life strategy and buy units in a mutual fund. And then as that mutual fund grows and gains, you will grow and gain as well. Their different strategies require different amounts of risk. So no risk in your whole life strategy. Get all your money back plus the interest and the dividends. No risk in the universal strategy, base universal life strategy. You're going to get a guaranteed rate of return on your dollar there. When you move into the index universal life strategy, the IUL, you're basically taking on opportunity cost. You're not going to lose any of your principal, but you could have got 4% in the guaranteed space. You gave that up for an opportunity to get whatever the cap rate was on that strategy. And then, of course, in a variable universal life strategy, you're taking on full market risk. Your mutual fund units can be worth zero, right? So depending on how much risk you want to take is going to what dictates the return there. But either way, you can access the cash value inside of your policy through a loan feature, and that's the way you get the money out of a life insurance policy without paying any taxes because there's no income. It is a loan, and your policy is the collateral for the loan. So you didn't actually collect income. That's why you don't have to pay taxes when you pull money out of an insurance policy, you do have to pay interest on the loans. So that's part of the overall strategy, and your gains kind of work to help dilute that or wash it out completely. So those are your top 3 strategies. Now, the insurance strategy, your cash value insurance strategy, is purchased with age and health. The younger you are, the healthier you are, the better that strategy is going to work for you. The municipal bonds and the treasury notes or the I bonds have a cap, right? They're not going to pay you double-digit returns. And then your Roth IRA or your Roth 401k either have an income limit or a dollar amount limit that you can add or you can utilize those strategies for. So we encourage you here at ARC Financial Strategies to max out all 3 of those strategies. So we use your Roth 401k, your Roth IRA, and your cash value strategies as accumulation strategies. And we're going to use the municipal bonds and the I bonds as part of your distribution strategies, right? So that's part of where your guaranteed income is going to come from. It's from the interest that you're going to earn on those bonds. And so as you build that out, $32,500 I can put into my 401k plan. $8,600 I can put into my Roth IRA strategy, right? So over $40,000 a year that I can put towards my financial freedom. Build me out a portfolio that's going to put me in a position where I can live free and go and enjoy my life and live out the purpose for which I was created. So here's your little gift for hanging out with me all the way to the end. If you want to get my 10-year plan to starting at 0 and building out yourself to a $2 million portfolio, what we want you to do is book a session to get your freedom number, and I'm going to show you how much money you need to save every single solitary year in order for you to get that $2 million portfolio built out in just 10 years. And here's the great thing about it. The 3 strategies that I just gave you are the only 3 strategies that you need in order to get that done. But I'm going to tell you exactly how much you need to put into each strategy in order to be financially free in 10 years. And that's starting from 0. So make sure that you go ahead on and book a session this week so that we can get you that information. So want to recap the overall thought process, right? I want to move myself from taxes to non-taxes. How do I do that? I got to create tax-free investment strategies. Top 3 tax-free investment strategies: Roth accounts, municipal bonds, treasury bonds, cash value that builds up inside of one of your insurance strategies. Use those 3 strategies to build out your $2 million portfolio, live off the interest, and you will be financially free and able to do all of the things that you want to do in your life. And your life was made for a purpose, and we want to help you get to that purpose. My name is Joel Hughey. I am the principal at ARC Financial Strategies, where predicting the rain doesn't count, building the ark does. We want to see you on the next episode. But if you want to get some more details and some more information on building out your overall strategies, check out this next video. That's going to give you those pieces of the puzzle that you need to get you where you want to go. We look forward to seeing you on our next episode. And remember, freedom ain't free.